Right, everyone, welcome. Hi. That's my favorite part of the event is when we open the virtual doors and I see all your names on my screen. That's lovely to see you. So good morning, good afternoon, good evening, everyone, and welcome to this Arini Global Insight series called Can You Scale Up Fine Wine? So I am Pauline Vicard, I'm the co-founder and executive director of Arini Global, and it's my huge pleasure to guide the discussions today. So we have a fascinating conversation coming up today. That's why I wanted to really start on time, because we could easily spend 3 hours to discuss the topic with our panelists. I know that they have a lot to share, and I'm really looking forward to hear all their views. But before I start introducing them, let's start with a bit of context for this conversation. And as we usually do, our traditional definition of the topic, so we all agree on what's going to be discussed. There's a as you know, there's a common saying in a business context that for a diversity of reasons, you either grow or die as a business. And I've always wondered if that were true for fine wine, because from the outside, it seems to be immune to so many things. So I really can't wait to find out on a personal level. But our conversation today is not about growth in general, but about scale, which is to me a particular type of growth. And doing something at scale in the context of that conversation is going to be defined as doing something at the required size to solve the problem. So from, we can note that from the beginning, we're not going to talk only about large scale requiring large volume of production, but really that insight series is going to be split in two parts, where we're going to try to determine on the first part the problems and the whys behind the need to scale up, and on the second part, if there is indeed a perfect size for fine wine production, and if there is, what are the challenges, obstacles, and steps to get there. So to answer all these questions, I am thrilled to welcome our 4 panelists for today. So first of all, we've got Joao Gomes de Silva. Hi, Joao, welcome.
Everyone.
Thanks for being with us. So Joao is the Chief Commercial Officer at Sograp in Portugal. So Sograp, I think, can be defined as the largest wine company in Portugal, and it has an important number of wine brands that goes from Mateus Rosé, that everyone knows, that is more of a maybe an FMCG than a fine wine, and up to Barcavela, which is without discussion the finest wine in Portugal, or at least the one that commands the highest price on the secondary market. Then we've got Vianney Gravreau. Hi, Vianney. Bonjour.
Hi, bonjour. Hello, everybody.
Sales and marketing director for 2 wines that I don't think need any kind of introduction in a fine wine context, because you are working with Ornellaia and Masseto, and you're in Italy, well, in Paris today, but in Italy normally. Yvan Massona, welcome, Yvan. Bonjour as well.
Hi, everyone. Hi, Pauline.
Yvan, who's the owner of Belargus, an estate which is located in the Loire Valley in France, that you have been created in 2018, if I'm correct, after the purchase of the vineyards of an iconic winemaker that's called Jopiton. We'll talk a bit about it later. And from the beginning, you had ambitions and projects that required scale. And last but certainly not least, Dan Petrosky, the winemaker of Massican in the US. And I'm saying winemaker because until June, you were winemaker and owner of Massican, which is a very interesting brand that has a very strong followership and almost a cult brand in a sense. We'll talk about it a bit later. And in June, you decided to sell to Gallo and remain winemaker, but no longer the owner. So we're going to talk about that decision in a minute. So as you see, and that was really the purpose and the goal for today, Yvan, Joao, Vianney, and Dan, they're coming from very different contexts, very different countries, different size, different history, different lengths of existence, different nature of capital as well. We're going to talk about that. And their wine portfolio and vineyard size, they differ massively, and so does the price of each of their fine wine. So that diversity of perspective was also to hopefully, for each of you listening today, to find a model that is maybe similar to yours if you're from the production side, or to the wineries you are working with if you are coming to us from the trade side. And because of course there's, I think, without any big spoiler alert, but there's never just one size fits all solution. So hearing different perspective is going to be interesting. The only housekeeping that I've got to tell you is that the chat is working, so you can communicate and you can comment, and we read everything. So please, if you've got something to share, if you've got opinion to share, you can put that in the chat. If you've got questions directly to the panels, you can use the Q&A for this, and I'll integrate them through the conversation, and we'll also have a bit of time at the end for a Q&A session. But let's dive in after that introduction and that definition. And as I was saying, the first part, we're going to talk about, you know, the problems and the whys behind the need to scale up. And Dan and Yvan, I wanted to start with you because to some extent, that whole idea behind that conversation came from you both, because you both clearly expressed the vital need that you had to scale up at one point of the history of your winery, of your project. So Yvan, from the very beginning, when you bought the estate from Jo, and Dan, as one of your explanation or justification when you surprised a lot of people by selling, you know, your successful brand to Gallo last June. So I wanted to start with you two and explores the reason why you felt the need to scale up and where that came from. And so Dan, starting with you, your argument for selling to Gallo was that you couldn't make it on your own. Like you didn't have the shoulder, or you didn't feel like you could do and achieve the ambition that you had for Massican on without external help. So I want to start by asking you, what was your problem and the whys behind your need to scale? And what does Gallo allow you to do, and how does it answer your questions?
Well, thank you, Pauline. I appreciate being here, and honored to be on this panel with these three gentlemen as well as yourself. The problem was all my own. And I say that because, you know, Massican as a wine brand doesn't need to exist. You know, as Massican is this Mediterranean white wines made in California, it's a business model, it's a consumer product, but it doesn't truly need to exist in the world. And so the problem with scale was all a problem of my own kind of self doing with regards to building my business model and building my business plan. I wanted to grow to a certain size in order to be able to financially reward myself and my family and live in the Napa Valley. Napa Valley is not the place to grow Tokai Fiorano and Ribolla Gialla. We're not here to talk about that as from an agricultural perspective. We're here to talk about that from an economic perspective. And it's also not the place to grow Tokai Fiorano and Ribolla Gialla in an economic perspective. Land values here are expensive. Cabernet is king. Cabernet sells for, you know, US $8,500 a ton on average. That is a tremendous amount of money. So my wine brand is an accessible luxury. It's something that is, you know, sells in the range of $30 to $40 US a bottle. It's hard to make a wine that's profitable at that rate if you're buying most of your grapes from Napa or Sonoma. So the problem was my own doing. And when I said I couldn't do this on my own, I explored all opportunities of reach and distribution, but the growth side of it was something that needed the capital investment. My bankers were very kind to me with a line of credit. But growing year over year, 10, 20, 30, 40% from the founding date of 2009 took a lot of capital investment. And I'm a bit of an egoist. I did not wish to have an investor or multiple investors. I don't want to answer to anyone in that capacity. But as I matured my business, the goal was to find a partner who can help secure more resources, not only capital, but also viticultural, and also a greater network of sales. So I can actually bring the idea, the vision of Massican to more consumers.
Can you just tell a bit about that vision and the ambition of Massican as a brand? Because, you know, you were very honest in saying, well, I needed to scale up. The first thing was to to be able to pay myself properly. But you also have an interesting ambition and vision for Masakan that you wanted to spread across the US. Can you talk a bit about that?
For sure. Masakan's an idea that always lived inside of me when I returned to the United States after living a year in Italy, drinking a lot of coastal white wines in Sicily. I came back to the United States thinking that this is a cultural lifestyle of eating and drinking that I wanted to pursue and I wanted to share with the world. So it was a dream and a romance and a nostalgia inside of me, and I kind of projected that forward. So as I think of Masakan, I have four simple tenets. You know, the tenets are: Masakan's not a winery; it's a brand. It's not a grape; it is a style. It's not a vintage, it is timeless. It's not a place, it is inside you. And like, those are the things that I wish to bring to more people because they bring me joy. And if I can find a few other people that wish to have those similar experiences on the table, it's important for me as a creator of this and winemaker of this brand to do that. And the reality of it is, you know, my economics of the brand were not making it potentially viable at the time to continue to push that idea forward. So that's where the partnership came with Gallo. And it was the right time, the right partners, and a family business, not run by, you know, Wall Street. So I couldn't have found a better partner.
And so you mentioned Gallo was needed for you in terms of resources, in terms of viticulture, and in terms of distribution as well. Can you elaborate a bit? What will Gallo do for your brand now?
The Gallo access to vineyards in California is second to none. That gives me the opportunity to take my core products, which are, you know, these California Italian-inspired white wines, and grow them on a scale from Northern California to Southern California. Right now, I am limiting myself to vineyards within the North Coast, so that includes Napa and Sonoma, and a little bit of the Delta and Lodi. This gives me the opportunity to go a little bit beyond that. It gives me the ability and freedom to be able to get in the car and drive 4 to 6 hours down south and scout out new vineyard opportunity and new vineyard land. From a distribution perspective, Masakan, as a small brand, always worked with small family-run distributors, mom and pop shops from east to west coast, and those come with their own challenges. They come with the challenges of reach. Oftentimes they don't have large sales teams, and it comes the challenges and the problems of capital, where they may not have the opportunity to pay you at all times. So finding a distribution network with reach and scale and human ambassadors that tell the story of Masakan from East Coast to West Coast to domestically, the Gallo team is, again, second to none in its ability to help a brand tell stories and scale.
So we're going to talk about, you know, size and price in the second part of that conversation. But just to give us a bit of context, can you tell us maybe how many bottles you were producing before and how many bottles you are expecting to produce now? Or you are, yeah.
For sure. 15 years ago, Masakan started at 5,000 bottles. 2022 vintage, which is what I'm at right now, is about 85,000 bottles. We are growing organically and slowly. The next 2 years will be in the 100 to 120,000 bottle range. But the future potential growth is limitless. You know, the plan for 10 years is only really to grow to 600,000 bottles. So it's only 5x growth from where I am today over 10 years. That's not that much in the grand scheme of things, but that's just that's the kind of the glass ceiling we've set for ourselves. We can blow through that hopefully a lot sooner than 10 years.
So you needed to scale for money access, for grape access, and I suppose all the viticultural knowledge and expertise that Gallo has and has gained over the years, and of course for distribution and being able to establish it to augment the reach of that. And I'm just going to quote you because that's something you said when we were prepping, but the why you chose Gallo as well as a partner is that through all its existence, Gallo never sold a brand. And that was something that was really important for you as well when you chose to work with them.
For sure. You know, Masakan is a first generation brand. There is no one behind my wife and me. We don't have any children. So I'm always on the lookout of who would be the next future potential winemaker for Masakan. I have some ideas. You always have to be succession planning. But I put it in the hands of a corporation the business that is family run and that is in its third generation and is set to do, you know, many more beyond that. And I've never felt at all during this process that Masakan would be something that would be disposable in their eyes. It's brought them a lot of joy to bring the wine brand into their portfolio, and it's brought me a lot of joy to see that. So I'm very content right now with the future potential of Masakan and where it will be when I turn in my boots and my winemaking vest and kind of sail off to the south of France and drink some rosé with some of you on this panel.
Thanks, Dan. Yvon, when we met when you just had purchased Jo Estate, you do not come from wine. You had a second life before, and you fall in love with Jo and with winemaking. And the first thing that you said to me is that I've got to scale up. I've got to have a bit of size so that I can make an impact and I can really create, the great wines of the Loire Valley that I think the region is capable of doing. So can you tell us a bit, what was the first thing that you needed to grow when you were saying, I need to make it bigger? What did that mean for you, and why did you start by that?
Yeah, I guess it was really the whole concept, so to speak, because it took me years to prepare for that project. So, and the reason I chose to launch this project was, frankly, a bit the underdog when it came to a current market value of wines. Anjou was really not the region that was the most dynamic or the most obvious. But what it had, which none of the others had, was two things. First, it's the home of Chenin, and it has terroirs that have centuries of history, literally more than 1,000 years in some occasions. That was very interesting. But also, it was the home of a few star winemakers that were already producing wines that were highly speculative. It's the part of the Loire, because of this hierarchy of Chenin terroirs, which is so precise. It's the only place in the Loire where the appellation system is tiny. It's a few tens of hectares for each appellation, unlike the rest of the Loire. And you already had the Richard Leroy's, the Stéphane Bernaudeau's of this world, and people that were producing wines with extremely speculative prices. Think 300, 400, 500 euros a bottle. But the reason for these prices was the size of their estates. They were farming tiny, tiny pieces of land, very good terroirs, but let's say 2 hectares, 3 hectares. My idea was to disrupt the market and try to aim for a similar viticulture, super ambitious viticulture, very ambitious winemaking techniques inspired by Burgundy. So single plot approach, very long aging up to 3 years, biodynamic in the vineyard. So pushing all the levers of quality, if you will, but offering a full range of terroirs, not just a couple of plots, a full range of terroirs. So it took me several years to come up and launch the project. 2 years were really devoted, 2016 to 2018, was devoted to understanding deeply the region, meeting with the local winemakers, hearing their story, understanding the potential of terroirs in this area for dry Chenin. Because what I forgot to say is that this region was very, very famous for sweet wines. That was a very interesting feature for me, because it meant, because sweet wines don't sell anymore for, let's say, 2 decades, a lot of properties were available on the market. They were just in search of a new generation, of new people to take the story forward. So actually, I took 2 years to meet, quote unquote, everybody, kiss many, many frogs, to be honest, seeing also a few very, very interesting properties, but I was waiting for this diamond in the rough, this sort of extreme jewel that could justify the project. And one day of February 2018, I meet with Jo Piton. He's indeed quite an icon, if not a legend, because he was part of this generation of pioneers in the 80s, 90s that started to produce fine wine in the Loire Valley. So going organic, using Chenin on hillsides to produce very ambitious wines. And he was retiring. And him and I hit it off from a personal standpoint, but also he was selling a very exceptional piece of terroir, which he spent most of his life reviving. A very steep hillside, which had been abandoned, which is part of a natural reserve. I mean, I'm sparing the details today, but it was exceptional enough for me to say, all right, this will be the beginning of my project. But it was not enough. And it's not because I wanted to be big per se. It's just that Jo's vineyard was 9 hectares. There was this jewel called Coteau des Treilles, another very, very well-known plot opposite it called Bonne Blanche. But the rest of the vineyard was normal, I would say, like everybody else. And my objective was to try and express what the region had best to offer. And then because of this long preparation, I was just plain lucky, I guess, because in a 6 months period, I was able to do 2 other acquisitions. So Jo's vineyard, we shook hands very quickly, but 2 months later, and maybe 3 or 4 months later, I acquired 2 other vineyards that are on the hotspots of the region. One of them is on Savanière, tiny appellation of Chenin, which is very hard to penetrate. And I was able to buy vineyards on this appellation with a very exceptional little clos. And a last acquisition, which is today the core of the domain Belargus, which is an exceptional piece of terroir, if there is any, because it's a quarter of the only Grand Cru in the Loire Valley. So I'm sure not everybody is French around the table, but people would know of the French hierarchy system, the Grand Cru, the Premier Cru, the village, the regional appellation. At the top of the pyramid, you have Grand Crus. In the whole Loire Valley, there's one Grand Cru. It's a tiny plot of 40 hectares, and I was able to buy 10 out of the 40 in the historical heart of this appellation, which is one of those millenary appellations. It has 1,000 years of viticulture history. So that's just to finish. So I didn't want to be big per se. I was not pursuing a volume strategy at all, but I wanted to propose to the market something that had never been proposed. Some of the best terroirs, arguably the best terroirs of one region, but giving the full range of complexity and the full ambition of the region, so to speak.
And to have that portfolio kind of approach as well, and to have so how many wines do you have now?
Well, from the get-go, 2018, we made nearly 15 cuvées. So we were able, from the very first vintage, to express the versatility of Chenin, mostly doing dry wines, but also doing a few sweet wines. And I don't think we'll talk about sweet wines today, but they are really the excellence that the region can produce as well. So, but the core of the production was dry, of course, but it was a single plot approach offering a full range. And when we came out to the market, we were able to propose a map. By the way, we drew a map because that region lacked one. So we drew a map of the region where people could relate and find, the main rivers, the Loire River, the Léon River, the main terroirs, and they could locate our plots. Then they could taste them and say, oh, wow, this plot is facing south. This one is facing north. They are opposite wines. How interesting, etc., etc. So I needed that scale, so to speak. We're talking about in total 20 plus hectares. So it's not huge, but it was big enough to be very disruptive.
Yeah. So, and what I find interesting, because I didn't mention that we didn't have the time to talk about this, Dan, but Dan, for you said, scaling is about the consumer and not about me. So you started from the consumer. Yvan, you started a bit the reversed way. Yeah, the other way. Because funnily enough, you didn't think about the consumer. You said, like, I want to create something that doesn't exist, and then hopefully I will meet my demand, which is, I find that really interesting, that contrast between you two, because in the world of fine wine, you find both of those approaches being quite successful.
And both are very, very valid, by the way. Both are very valid.
Before I move on to Vianney, I've got one last question for you, Yvan, on that stage, is that I've mentioned that very quickly, but you had a first life before being a winemaker and an estate owner. And your first life was in merger and acquisition and finance. So, numbers were kind of your forte, I'd say. I'm not going to ask you how much that influenced you, but if there's any lessons that you've learned in M&A that could potentially be valuable to share with everyone when it comes to scaling up, if there's something that you can share with us.
I applied many things from my previous life in private equity, but if I was to name one, I would talk about the team, because my vision was very different from a lot of the similar size wineries in France, which tend to be on the model of a one-man band. It can be a one-woman band, but the idea is that In the wine world, a lot of people do many things. They work in the vineyards, they vinify, they do marketing, they do sales, they do a bit of everything. My model was very different. I just wanted to create a team that was built with very strong individuals. So super, I chose to surround myself with young people in their 20s, but very specialized and very well trained and very passionate. But the benefit of this model is obviously that you can build a real business and being able to apply very precise methods to each part of the business and avoid this over-generalization that tends to be the norm, certainly in France, I'd say.
I'd say maybe, Dan, that was also part of your interest in finding people to work with, because you were maybe a bit tired of being a one-person band. So Vianney, you operate in a slightly different world, I'd say, than Yvan and Dan with Ornellaia and Masseto. But I don't know if people realize how different, at least in size, Ornellaia and Masseto are, because Masseto is an 11-hectare property and Ornellaia is 130, so more than 10 times bigger. So when we talk about scale, and in that context, what kind of challenges does this two very different size cause for you, and how do you work with so many different estates while being similar?
I would say it's not the size per se, but it's the relationship between demand and supply. And we're extremely fortunate at Masseto and Ornellaia to have way more demand than supply. So scale, I think, should be understood in relation to supply versus demand. You can be big and have small demand. You can be small and have big demand. So we're very fortunate to be in that bracket where demand far outstrips supply. So that's, I would rather speak about that, because it's less coming, well, there has to be a medium point, but it's less coming from the size per se. So of course, in the case of Masseto, it's super small, and there is very strong demand. So any decision you take has to be done with tweezers. In the case of Ornellaia, which is probably closer in size to the lower average size of a Bordeaux Cru Classé, we're a bit higher in the air above the ground. But again, we have more demand than we can supply. So again, it's all about managing allocations and scarcity, which, as I like sometimes to joke, means that I'm one of the few sales directors paid to hold back the wine rather than to push it. So,
to say no to people.
Well, in a way, but I have to do it nicely, and I try. And I have to have a very good reason for doing it. So it's a different frame of mind. And I've been on the other side. I've worked for other wineries which were more in a takeoff stage, so where it was all about selling. So that means that we need distributors who understand that, who understand this logic of scarcity, who understand this precision that we aim for in distribution and in reaching the kind of customers who like and understand these wines. And it's much less about pushing cases than it is fine-tuning your distribution and being extremely close to the market, having your pulse on the finger in quite a few markets to really follow that. When it comes to scale, even at a small scale like Masseto, and even at a scale when 25 years ago, something like that, when Ornellaia was smaller, extensions in the vineyard at their scale, so plus 4 hectares, in the case of Masseto 20 years ago, and plus whatever it was, a couple of tens of hectares in the mid-90s for Ornellaia, even at such small scales, actually had consequences, which led to the introduction of second wines for both estates. So, even at our stages, managing scarcity and paying attention to scale has consequences on the range, for example.
And that was the logic for the second wine, is that you had to scale up for distribution reasons?
No. In the case of Masseto, we realized that 4 adjoining hectares were made of the same soil, was exactly the same terroir. And that happened as we uprooted some Sauvignon Blanc, and we saw, hey, that's the same blue vein of clay. And why don't we plant some Cabernet Franc and some Merlot? And planting Cabernet Franc 25 years ago was it was quite an idea. I would be lying if I told you that I'm 100% sure they did it to adapt to global warming. We don't know. But that's what happened, and took 20 years for the vines to start producing grapes that were judged to be 4 or 5 years ago on the level of Masseto, and therefore allowing us to start thinking about a possible second wine. And in the case of Onelaya, it was an important purchase of other vineyards, which again allowed us to have to make an even better selection, and therefore to create an even better Onelaya and to introduce a second wine.
So if we said in the introduction that, you know, doing things at scales is doing the things at the required size to solve the problem. Well, one of your problems is you can't really grow production because there's not an infinite number of vines and terroir that will give you the quality that you want. You can't really, you know, scale distribution that much because you don't have much more wines to say. Is it fair to conclude that the only thing that you can scale or grow is your price?
So it's two things. Bulgaria is about the size of Margaux, Pauillac, more or less, about the same number of producers as Pauillac, 70-ish. And just about everything that can be planted is planted. So you can only grow by buying existing estates. And there are not that many or that many hectares on sale. We're surrounded by forest. That forest is protected, is classified, and it's the playground of the local hunters. And I do not know who to be most afraid of, the Italian administration or the local hunters. And I don't want to find out, honestly. People always say, yes, you can go by price, but there's another element, which is, again, growing the quality of your distribution. You never know. We're always on the lookout for the new trends, trying to understand our customers, the trends, who drinks our wines, where, in what circumstance, where do they come from? Do they come from the Bordeaux side of things? Do they come from the Burgundy side of things? Do they come from the Piemonte side of things? So, you know, all these new distribution channels, we look at them. Is it interesting for us? Does the world need one more online distribution model? So it's both prices and the quality of your distribution, I would say.
So loads of people in the fine wine world, you know, rightly talk about the quality of distribution being so important in the short and long run. But what do we really mean by quality of distribution? Is it just finding people that understand your brand, that help you build it? Like, what's the Blick length intensity? What would be the equivalent of a Blick system to evaluate your distribution system?
Well, you have to, you have two main models, either an exclusive importer in one country or La Place, to simplify, but let's simplify. Both have their pros and cons. There's been a lot of noise articles, discussions about all the non-Bordeaux wines coming to La Place. It's I think it's a move that a winery must make in a very careful way. It's not a magic solution to any kind of distribution issue. And especially in our case, as we go through La Place, we are one step further removed from the final customer, which means that we have to be even more present on the field. I have 4 people around the world based in the markets who know the food and beverage managers, who know the sommeliers, who know the journalists, who follow what happens. And when the time to allocate our wines come, which is in the coming weeks, we have endless exchanges about, who is the right distributor for us, who understands our wine, who really played a partnership game, who maybe, shall we call it, misbehaved with our recommended prices. And it's every year. It's every year. Remember what Steve Jobs used to say. Sometimes it gets to a point it's more about who you do not sell to than who you sell to.
Yeah. And
we try to keep that in mind. So it's a very impressionist painting. It's a lot of small patches of color, and each one has to be weighted, balanced. Does it fit with the one next to it to get a beautiful and harmonious big picture?
And I think that sometimes people underestimate the work that it is to build a quality distribution, regardless of, the assessments of quality that you put in place. But it's really probably as much work as doing as making the wine. Joao, we had a fascinating conversation, and I'm really glad for the opportunity to share some of it with everyone today, because so Grapp, as I mentioned very quickly, you have a portfolio with a certain number of brands, and one is classified as, you know, FMCG, and you work them, you grow them with margins and objectives that are close to FMCG strategy. And then you've got your fine wine portfolio with another set of objective and another set of margin. So there was a whole reason behind that reorganization of that portfolio that just happened very recently. Can you tell us a bit why you decide to reorganize this? Because I think that will be relevant to the conversation.
Sure. Hi, everybody. Well, it's fairly simple, and it sort of addresses some of the things that have already been mentioned today. As you said, we have quite a complex portfolio because we've got a lot of brands. We work in different regional denominations in Portugal, and we have historical brands which are not even DOC wines, and to make sense out of this complexity, and in fact our new portfolio structure or organization is actually right now for internal use only, and it basically helps us organize internal communication, organize understanding, aligning management practices with the characteristics that each brand has, and each brand endorses or addresses either a different consumer type or different needs or occasions from consumers, and we have to align, from winemaking to all management practices, from distribution that was mentioned by Vianney, to pricing decisions, to investments that are justified and where those investments are made. I mean, we put more investment at the vineyard level, or do we put more investment at addressing consumers at the market? Reading the evolution from a consumer side, as Dan was mentioning at the beginning, or just forgetting about the consumer and having a personalized story about a more premium brand. So we basically divided our portfolio in two segments. The first one we call them consumer wines, and these are, as you mentioned, dealt almost as if they were fast-moving consumer goods realities. And then we have the prestige wine section. I think the prestige wine segment is particularly interesting because for many years we had, a more, let's say, classic organization in our portfolio. We had the fine wines, and then we had premium wines, and then we had concept wines, and then some of the premium wines were estate driven, some others weren't, and at a certain point, too many drawers and too much complexity, and in particular for fine wines, and this is about scale, and we're coming from Portugal, which is probably not the biggest production country in what is concerned premium and fine wines. What we realized is that if we want to be sustainable, and size and scale in that respect, and following your definition, is about value, that the value that is generated as measured by the sales, or as measured by the cash that is generated from the business. If we want to be sustainable in the sense that we fund the investments that are needed, that we fund the organization that is needed to work the distribution, or we fund the awareness or the recognition, if you go more into fine wines and less into consumer, and we want to generate the return for the stakeholders or for the shareholders.
But in case for you is family, just to precise,
it is family,
but it's 100%
family,
yeah.
And this is and that is a critical part of the sustainability. I mean, if you have to, I was listening to even, and coming from equity, from the funds world, if you have to respond every quarter or every year to the requirement, then decisions become hectic. But once we grouped the difference between prestige and consumer is, on one hand, who we are addressing and which way we build the brands. As I said, fast-moving consumer goods on the one hand, and more individualized, terroir-driven, addressed to a more knowledgeable consumer or more interested consumer, or addressing a user occasion of a regular consumer, but which is a special occasion. What we realized is that when we gain scale, in the sense that we widen the base that we are addressing with the business of prestige, we enter a broader territory and a profitable one. Okay, and therefore we become more sustainable, and that's how, let's say, we went from fine wines to prestige wines, which is a wider base. Within those prestige wines, there are fine wines. I mean, you've mentioned Barcavellia. We've got a few other ones. Legado is another example. You know, we've got wines that come from 8 hectares vineyards to top-end wines which are produced from properties that have 140, 160 hectares of vineyard, depending on the region. But in essence, they share the same basis of construction in prestige, but they address a broader audience, let's put it this way, and therefore they become more sustainable.
So one of the hypotheses that I had when I started is that when you look at the world of food and restaurants, you know, the 3 Michelin star restaurants are, you know, the flagship. They're here for the reputation, they're here for, you know, the brand, but they lose a lot of money. They are usually not viable financially, and they are consolidated in the group by the rest of the big, you know, hospitality group activities. So the financial sustainability is within a group, but not as an individual standalone restaurant. If we look at your finest wine in your portfolio, is that the same? Is everyone financially sustainable, or do you need to balance out, you know, is it the same thing as a restaurant?
I think it's a very varied, because the portfolio is so wide. We've got all kinds of situations. I mean, Barcavellia is certainly a self-sustained, from a financial perspective, a self-sustained wine, and that has to do with the fact that, you know, we have a history of close to 70 years of being in the market, and always aiming at a certain type of work and positioning, and now we're taking the benefit from it. But at the beginning, back in 1952, when the first vintage was released of Barcavellia, and it had to wait for about 7 years before it was released into the market, you know, if there hadn't been other wines being produced by the Ferreira house at that moment, you know, it wouldn't have been a sustainable business. So the notion of portfolio, and the notion that different brands are at different stages of development, and once you have a portfolio, you can balance the different needs of each of the brands. That's obviously important. Where I think the risk lies, to be very honest, and sometimes I look at the in some conversations about wines, I compare wine with the horse riding entertainment. You know, if you become so exclusive, you know, you become detached from the world. And I think the 5-star restaurant or 3 Michelin star restaurant you've mentioned is probably an example. If you restrict the base that you're addressing, now it depends on the category and depends on the realities. There are various, you know, the world is, thank God, a very right place. You end up, you know, talking to yourself. At the end of the day, you're just talking to yourself, because you're the only one that understands your own language and whatever you wanna tell of your story. So you have to balance this notion of scarcity, which for Barcavelia is obviously the critical, most important single factor, of course, with the quality and the consistency, historically, etc. With the fact that you still need to address, in fact, to create this unmet demand that sustains the wine, you still need to address a wide enough audience in order to have a business that goes forward, right?
And so we're going to come back to that in a minute, because of course that's a question that's relevant to everyone, is, you know, how you manage scarcity in the world of fine wine in a way that you're still being relevant to enough people. But I wanted to take a moment, because one part of our conversation was like, for your, I'd say your FMCG part of portfolio, you have a given objective of margins that is slightly lower than the objective of margins that you have for your prestige portfolio. And if you're comfortable to share those margins, I will let you share them. But what I wanted to talk about is that when we had that conversation, you mentioned, you know what, this is probably going to change, or one of the reasons why we need to think carefully about scale and growth is sustainability in the face of climate change. And we believe that the costs are going to be greater, the financial costs are going to be greater for our finest wines than it is going to be for our FMCG. Therefore, the financial impact of sustainability will be impacting our margins more for the higher end of our portfolio. Can you talk about this and tell us why you think it's going to be this way?
Well, traditionally, I mean, the way we look at the financial equation of the business would say that we demand higher gross margins from our prestige wines or from our fine wines, because although we have to invest less in order to bring them to the market, we have to pay for a much higher capital base, and therefore, from a return on capital employed perspective, you need to generate a stronger
cash flow,
cash base. What's happening right now is that when you look at climate change and you look at the quality levels that you have to sustain for fine wines and the regularity, so the consistency across time, the investment that you need to make, either because you have to you know, in regions where irrigation was not an issue right now, just to control stress at the vineyard, you need to invest in irrigation, or you will face a much bigger variance between, in terms of quantity between harvests, because you've got extreme climatic factors. You need to have a war chest, let's put it this way, which is bigger which is probably more demanding for fine wines than what it is for consumer. On the other hand, however, we cannot forget that the pressure on margins on the side of the consumer demand, because of the nature of the distribution, because of the lower level of loyalty by consumers, because of the higher price elasticity that demand has in those levels, and the number and frequency of economic shocks that we've seen in the last, I don't know, half a dozen years, it's just a signal, we believe, or what will be coming. Also raises the demand in terms of consumer wines. But if we see that the weight of the cost of the wine itself, and therefore of the all the costs and investments that are related to the vineyard, is so much more important on fine wines, the money required to sustain quality and consistency is daunting, and I fully understand what Dan was saying at his opening statement.
So if I summarize everything that the four of you have been saying, the problems and the need for scaling up can come from very different reasons. That can come from an individual need of making more money, or a need to fulfill an ambition of distribution and reach that you can't do on your own. In case of Yvan, the need to scale up was because you wanted to create something disruptive that you wouldn't have been able to do with less. In your case, Vianney, is more about, you know, maybe maintaining, and I'd say it's a bit more à la marge, at the margin, but I don't think it translates in English. But you need to refine. It's a refinement. It's a fine tuning of things that you are doing. And Joao, it's also, well, there are some financial pressures that are important, and we need to scale up because either they come from the market or they come from climate change, but there are really serious reasons for which we need to reevaluate our margins and the way we make money. Dan, there's a question for you in the Q&A, which I find really interesting as a link to the next question for everyone. But do you have to change the way you talk about the brand after scaling up? Like, how do you plan on communicating now that you are part of Gallo and in some way can't really rely on being small scale boutique as part of the brand? How will you manage that shift? I think that's a very good question.
That's a great question, and I think this concept of scarcity in the wine industry is something that has actually held us back from reaching consumers. As Vianney said earlier, it's like, how do you say no pleasantly to someone is the hardest job in the business. And I always found that saying no to people was a marketing technique used here pretty frequently in Napa Valley. And I think you don't have to change your story if you're saying yes to everyone. If you have the supply to finance the demand and to help support the demand, you're meeting new customers every day. There's generational shifts of customers. There's so many wine drinkers out there, so many potential wine drinkers out there that if you're changing your story and evolving your story to a new trend or a new fad, you're going to eventually fail. But if you're consistent and honest and authentic in how you communicate with the consumer and the new consumer that you're engaging with on a daily basis, the opportunities are limitless. So I don't plan on changing the Masakan story or the idea or the impetus. It's what got us here today, and it's hopefully which will help us increase our scale and our scope and our reach tomorrow.
So that was a perfect link to the last part that we will have the time to discuss today. But I think it's one of the most important things, because that's the thing is, most of the time you can't really increase the production for fine wine. You can have second wines or you can have a portfolio of brands, but you can't really extend the vineyard size forever. Or even in the case of Barcavella, because if people in the audience don't know, Barcavella is not estate grown, so you could buy more fruit to make more wines because you have that demand and you have people that would like to buy more. So the $1 million question is how you balance, the extent of production that you can have and the scarcity that you need or not, because Dan would argue that you don't need scarcity, that you can maintain reputation and price to a high level without that scarcity effect. How do you balance all of that? And how do you balance all of it with accessibility, which is again being drunk or tasted by enough people that you stay relevant? Yvonne, I'd like to start with you because you're a newcomer, so I wanted to understand how all of those notions played in your vision for Belargus.
Very good question, because life goes on quite fast in the wine world. So it's a new project, but it's already our 6th vintage. So we now have not only a market presence, but I would say also a local presence, which allows us to have access to a potential deal flow of new vineyards. So increasing capacity is a question that, of course, came to our mind very early on. And every day not every day, but let's say every other month, we would be offered an opportunity to acquire a piece of land. And then to me, to answer your question, it's managing this balance is about being true to the brand, so to speak, so true to the project. In our case, we've decided that adding new vineyards without exceptional characteristics didn't make sense, because we don't need us to do that. So we are saying no to opportunities that are ordinary vineyards, I would say. But of course, when occasionally we are offered an opportunity to acquire a very small plot, but very interesting terroir with fundamental characteristics that can allow the production of a really fine wine, or a specific history or specific landscape elements, then we would selectively say yes. And it's so, and if I look back on the last 5 years or so, from the beginning that I described, those 3 acquisitions, And today, there's a little bit of things on top, but they've been very selectively added because we wanted to stay true to our promise. It was to express, quote unquote, some of the best terroirs of the region. And it means saying no to a lot of new production potential and therefore avoiding to serve all the demand. So
I mentioned my example of the 3 Michelin star restaurant losing money but being important for the image. In your case, if I remember correctly, when we prepped together, it's almost the reverse, because you say your entry level, you are more doing them for like as a political statement, because you wouldn't need them that much. Can you tell us a bit more about that?
I mean, clearly, part of my objective when I started this project was to help break the glass ceiling of the Loire, because I had identified a true injustice in my mind, which is that the very best wineries in the Loire Valley had a price range which was very compressed, 2 to 3 ratio between the entry level and the top cuvées. It's nothing but unfair, because if you compare that even with non-speculative regions in France, take Alsace as an example, you will find many, many wineries with a ratio of 1 to 10, 1 to 15, because it's very different to farm a normal vineyard, which is high yield and very easy to farm, and a very steep hillside. So I wanted to break that glass ceiling, and therefore part of my mission was to create cuvées at, I would say, never tried before prices. But to compensate, and
that was, to give an idea, that was 100 euros for
for the dry wine, it was 100 euros at the time, because I chose a 1 to 5 ratio, 20 euro for the entry level cuvée retail and 100 for the top level on the dry side. But of course, I wanted to be careful to avoid one pitfall, which could have been, oh my God, Belarus is really targeting the 1% or the 0.1% of the world. They're making wine for the rich. And clearly that was not my objective. My objective was to make a full range of wines. And frankly, the cuvée that is our introduction cuvée, which is the equivalent of a regional Burgundy in the Bourgogne world, is very much a political statement. It's about saying, okay, for 20 euro or so, you have a wine which is farmed in biodynamic, very low yields, below 30 hectoliters per hectare, aged for 12 to 18 months, with a crafted bottle and wax cover. You have all this for about 20 euro. And indeed, it was bringing coherence to the message, because again, I wanted to avoid that risk, that reputation risk.
Yeah, and Dan, I think that was also something that was really important for you, to have a limit, not to have wines that were too expensive, because your role was for a higher number of people to taste and to experience and to bring on. Well, Vianney, I'm going to have to ask the question for you, because you obviously also is the one that maybe is now only affordable by maybe not the 1% at least, even if the price of Italian wines have increased less than the price of Burgundy wines in the last few years. And I disconnected my headphones, so I can't hear you anymore. That's when I talk with my hands quite a lot. How do you do to reconcile? Because that must be a very important question for you, because your wines are going to increase in price by simple, if you continue to be successful at growing the demand, you can't grow production more. So the price are going to slowly or quickly increase, depending on your strategy, but they are going to increase. How do you make sure, how do you balance that scarcity, exclusivity, accessibility kind of equation and make sure you'll stay relevant in the future?
It's a few things. When it comes to availability, there's only so much. So you can say whatever you want about making it available. Once you're out of stock, you're out of stock. Once you've shipped everything you were ready to ship, and then not touching your library, that's that. You can't produce what is not. So that's one thing. So within that framework, is it about maintaining, as you said, availability? For me, it's more about maintaining desirability. It's as you said, the 1%. The people who are interested in fine wine hopefully will have heard of Maceto and Ornellaia. If they haven't, it's because we still have a job to do, and we are working. So there are still quite a few people who who don't know about Maceto and Andalaya, and we need to talk to them. What can we? Once you've said that, it's about understanding who drinks your wine and where are these people going. Just to give you an example, we did a couple of years ago 2 events for Maceto in Colombia. Not exactly the biggest wine market in the world, state-controlled alcohol distribution. But when you find the right partner who introduces you to the right places and to the right customers, I've met Maceto lovers who had verticals of Maceto in Colombia in their cellars that were seriously impressive. So, of course, and these people mostly buy their Maceto in Miami, in Frankfurt, in London, in Paris, in New York, in Houston. But going to see them, going to understand them, going to meet them is also a way of spreading the message of the estates. It doesn't take, it's not about buying newspaper ads, you know, or this kind of thing, because we know that the people who drink Maceto or Melaya in Colombia, they will order it when they travel to London, to Frankfurt, to Singapore, to everywhere. So it's more about a network effect of understanding where the people who can drink your wines, are interested in your wines, will find them. And in our particular case, of course, we are talking about a very certain small percentage of the population, and understanding that this is a transnational, I don't like the word, but let's say for the sake of simplicity, a transnational class, and understanding this distribution channel, or the various ways to touch them. And again, coming back to desirability, I'm sure we're all seeing the same trend of people drinking less, of the young drinking less. That should frighten us. That really should frighten us. We see that the upper level of quality is doing very well. The middle is suffering a lot, and let's not even talk about the people who supply bottles on which they make 2 cents. So you've got to choose your camp. And in our case, we've decided something that has been happening in France for 20 years, but which for Italian wine is very new. We decided to go and start talking to the student wine clubs of the top universities in the world. And when I suggested we do this, when I started pushing for it, people said, "Oh my God, this is so new, la la la." And I say, "Hey, wakey. The French have been doing it for 20 years. I actually came to wine through the student wine club. And when we were doing 1 tasting a month, we were happy. Today, the wine club of the graduate school I attend, and they are doing 1 tasting a week, if not 2. And at least we know that people are drinking less, but we know that there are clusters out there of young people in top schools who are interested in wine. If we don't talk to them, I think we need our heads checked.
Thank you. And Joao, because I'm very aware of the time, and as always, I've got this frustration of having so many more questions for you guys. But I wanted to ask you the last question, which is also a follow-up on what Dan said. Like, you know, we've talked about scarcity too much and rarity. We shouldn't. And in your case, that might be the easiest, because again, Barcavella is not estate grown, and you have access to very, very good fruit. So you could potentially buy more fruit, maintain the level of quality of your wine, and having to say no to less people. But that's something that you know, to me, it sounds so obvious. It's like, why, if you could sell 25% more, why on earth would you not do it? What's the perfect balance to find there? How do you decide to what quantity do you decide to limit all of this?
Well, that's not an easy question. I think, well, first and foremost, in the case of Barcavella in particular, it's the it's nature that tells us how many bottles we can bottle out of our, let's say, installed production capacity at the vineyard. We call them icon vineyards, and we do have an area which is available. They're all produced by us, the grapes. We don't even have to buy grapes, and I think there are three or four criteria which will probably help us see what's gonna be coming. On one hand, one needs to be aware that unlike France and Italy, Portugal as an origin, it's at a completely different stage of recognition in the world market, and we are seeing an increasing interest And we're now at the stage where allocation, which we also practice for Barcavelha, is shifting from the Portuguese market into international markets, okay? Which also has issues that are brought by that in terms of valuation. The way the wine is valued is not so much the way we price it, it's the way that it's valued in the market. It's different when you talk about an allocation geared towards the Portuguese market or the UK market or the French market or the Brazilian market, for example, and all the trade that gets generated and controlling distribution. And I'm again aligned with Vianney, controlling distribution for us is critical, right? We want to know where the wine gets sold to and what people do with our wine, and we like to assess the the behavior they've been having to take decisions. That's one thing. The second thing is we have to ensure the quality standards and the unmet demand. So scarcity, which I would say it's better measured by the degree of unmet demand and the degree of valuation that wine like Barcavelha commands in the market, and that's, you can see that in the secondary market, or the value of old vintages in different marketplaces. We need to respect that. We do not speculate with the price of Barcavelha. We as a philosophical, and this has to do with being a family company, we don't want our most iconic wine to be subject for speculation. And therefore, we control the price at which we sell as part of that effort. Now, the wine, the wine has increased in value in the last 5-10 years in a remarkable way, but not fueled by us. And we will eventually increase demand as far as this scarcity concept and the way we want to manage, which is pretty much the way Vianney was describing it, can be met. And yes, that means that there is a limit to the scaling up of a product or a brand, which is not driven by the production capacity, but it's driven by the nature of the business that we want to manage. Right? I don't want to, as a limit, I don't want a business which is so big that I cannot know personally every single point where I sell it to, right? And that's a lot of effort, right?
That reminds me of Nigel Grinning and Felton Road when they decided how big they wanted to be, and Blair, the winemaker, decided on X number of barrels because that's the number of barrels he could manage during winemaking, because otherwise it would become an Excel spreadsheet kind of winemaker, and he didn't want that. So again, your personal ambition are really, really important in deciding what scale means for you.
And that doesn't mean, and to my point and to Ivan's point about having a wine that opens, and to Vianney's point about reaching the future wine consumers and fighting against something which is extremely scared. And if you see the last statistics, this notion of portfolio, probably Barcavelha is, Barcavelha is a wine that I never consumed before I was 45 years old, I think, right? Yeah. So that there's a stage for everything. But as a wine producer like Sograp is, we should have an approach to our portfolio that enables us to speak to consumers and feed the consumer base. And right now, I'm very aligned. One of the most prolific things that we do is the partnerships we have with universities in Portugal, which nowadays have a very wide base of international students, and to whom we present our wines on a regular basis. We're building the future consumers of Barcavelha, and by then, eventually, 20 years from now, the business will be certainly bigger. I would guess so, but always keeping these basic characteristics that it has today.
And something very similar to what you're doing, Dan, as well in creating the demand for white wine in the US. Yeah. It's already 5:10 on my part of the world, and everyone's been extremely nice to stay until the end, despite that delay. Thank you so much for sharing so much and for staying with us and for being with us. There was a couple of questions in the Q&A that I didn't address on purpose because they are very long questions to address that are very hard to summarize in a minute, and I didn't want to have to haste that. But if you've learned from that webinar, if you appreciate it, you can go to our website, www.arini.global, and become a member. There's loads of insights already. There's loads of analysis on the question of how to become an icon and, you know, how to get there and the process and to make it into the fine wine world already. So that's not only a great way to support us, but the best way to unlock all those analysis and reports on the topic of distribution and creation of fine wine and what does it take and everything. Because now, whether you are producing or selling fine wine, you need reliable, specific data to make informed decisions, and we have just that in store for you. That was me trying to be commercial and trying to explain what we do. It's not what I do best, but until next time, everyone. Cheers. I think Sarah gave you the information that all of this is going to be summarized in an article, but will also be available as a podcast and in a video that you will receive through the newsletter. So please sign up to the newsletter if you haven't yet. And we have loads of things planned for 2024 and loads of very, very interesting conversation coming up. So I'm really looking forward to see you all very soon. Thanks, everyone. Have a lovely evening.
Thank you very much.